Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers. It's Monday, April 27th, 2026, and we're here to kick off your week with our latest AI-generated market commentary.
That's right, Ethan. We've spent the weekend sifting through a fresh batch of data collected on Sunday, April 26th. After a surprisingly quiet Saturday, social media activity picked right back up, flagging a decent number of posts across several key tech and semiconductor names.
And what we're seeing, Brooke, is a real surge of enthusiasm, particularly around the AI compute sector. There's a lot of optimistic chatter out there about the future growth potential of some big players.
Indeed. However, our AI-driven insights also flagged some significant risk factors and valuation concerns that definitely need a closer look. We're seeing a mix of promising sentiment and cautious KPIs today.
All right, let's jump right into it. First up today, we're talking about Intel, symbol INTC. There's a strong bullish outlook in the discussions, with many users believing Intel, alongside other semiconductor giants, could become a trillion-dollar company, really driving that AI compute infrastructure. We're seeing strong conviction, with one user even allocating 60% of their portfolio to INTC, and insider trading showing net purchases. That's a good sign of internal confidence, wouldn't you say?
Well, Ethan, while that bullish sentiment is certainly palpable, and it's great to see insider confidence, the current KPIs for Intel do raise some eyebrows. The company is currently operating at a net loss, with a negative net profit margin of nearly 6% and negative earnings per share. And that debt-to-equity ratio, it's sitting at a very high 36.028. To hit that trillion-dollar company mark from its current market cap of around $415 billion, it would need to more than double. Can it really achieve that with its current financial picture? But Brooke, the market is just starting to price in this paradigm shift of CPUs joining GPUs as a key infrastructure layer for AI. News suggests Intel could still be undervalued based on strong free cash flow, and HSBC has reset their price target, implying future growth expectations. This isn't about today's numbers, it's about tomorrow's massive potential. We've seen Intel's rating fluctuate, but it was classified as a buy on April 14th and 24th, so this strong community optimism about AI might just be that catalyst needed. I understand the forward-looking perspective, Ethan. The insider buying and institutional targets do point to anticipated improvements. If that AI-driven revenue truly takes off, it could definitely turn those negative profit margins positive and over time help reduce that debt burden. However, approaching a company with a significant debt load and current unprofitability, even with high future potential, requires careful consideration. Our previous classifications for Intel had shifted from stay away to buy quite recently, but with these KPIs, caution remains warranted.
You know what, Brooke? Given the powerful potential if Intel executes on the AI promise and that insider confidence, I think it still shows a promising trajectory.
I'll concede the future potential, but the current financial health necessitates a degree of prudence.
So for Intel, considering the AI narrative and insider confidence against current profitability challenges, our classification today is a cautious buy.
Next up, we're talking about advanced micro devices, or AMD. Ethan, the social media buzz around AMD is also incredibly bullish, with similar trillion-dollar company claims tied to its role in AI.
Absolutely, Brooke. AMD is absolutely at the forefront of the AI chip rally. We're seeing reports of analysts going bullish, hiking price targets by 70%, and shares have just been skyrocketing. The company's revenue growth is a robust 34.1%, which clearly shows they're capitalizing on this paradigm shift. Plus, significant insider buying, 6.48% of total insider holdings, reinforces that internal belief in the company's future. It sounds like they're really delivering.
They are delivering growth, Ethan, but at what price? When I look at AMD's KPIs, I see a price-to-earnings ratio of over 133.25 and a price-to-book ratio near 9. That is an extremely high valuation. The stock is trading almost at its 52-week high after a massive ascent. This suggests that much of that skyrocketing and anticipated future growth is already heavily priced into the stock. You're paying a premium for perfection. And let's not overlook that high debt-to-equity ratio, 6.359. That's a significant reliance on debt financing, adding a layer of financial risk. But the news is so positive. They just secured an AI deal in France, they're expanding into the public sector. This momentum is undeniable, and the upcoming earnings on May 5th could really cement their position. The news is certainly exciting, and the growth rate is impressive. But for new investments, the risk-reward profile looks unfavorable right now. An extremely high PE leaves very little room for error. Any missed expectations could lead to a sharp correction. The high debt also compounds the risk if market conditions shift. While the market sentiment is undeniably bullish, the numbers suggest that the market has already factored in a substantial amount of that future optimism.
So, despite the incredible buzz and strong revenue growth, your data-driven approach is telling us to hold back?
Precisely. For AMD, despite the strong community optimism and impressive growth, the extremely high valuation and significant debt make it a high-risk entry point for new investors. Our previous classifications for AMD have often been stay away in recent times, and today the KPIs reinforce that. All right then, for AMD, our classification today is stay away. All right, let's round up today's picks for a closer look. Investigate as buy? None. Investigate as cautious buy? Intel Corporation, INTC. Investigate as speculative gamble, Advanced Micro Devices, AMD.
That brings us to the end of today's analysis. Thank you for joining us.
Remember, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset. Indeed. We'll be back tomorrow with more AI-generated insights for your daily hunt. Until then, stay sharp. Happy hunting, everyone.